Hi there, this is Anne. In this video, I'm going to share with you how to read the market structures, which order blocks will hold, and the secret how to snipe or how to scalp the order blocks. This could be the most important videos I ever created related to order blocks trading strategy. So please watch it from the beginning until the end. For those who are new to trading the order blocks, I would suggest you to also watch my other tutorials, part 1, 2, 3, 4, because basically this video is part 5. But since you're already here, let me show you quick how I trade the order blocks. So let's begin. This is how I trade the order block. First, I decide a swing high and a swing low. Now, after you pick a swing high, swing low, you wait for the breakout. Either break swing low or break swing high. In this example, the price break the swing low. This is the break of structure. Now, when the price breaks swing low, your order block is the last bullish candle before the breakout happens. So this is your order block. Now, I will give you another example. This is a swing high and this is a swing low. In this example, the price breaks the swing high. This is my break of structure. So if the price breaks swing high, the order block is the last bearish candle before the breakout happened. That's basically how you trade the order block. Alright, now let's continue. We all know there are different types of market structures, which is a downtrend market, a sideways market, and an uptrend market. The market never moves straight away like this in a downtrend, or never move straight like this in a sideways, or just straight going up like this in an uptrend. The market always moves like a wave. Some traders recognize these highs and lows with different names, but basically they are the same. When I show you the order block, I consider this as swing high, and this is a swing low. Some others consider this as a resistance and this as a support. So these are all the same name. But for this purpose, I'm going to use high and low because I'm going to show it to you the different types of highs and lows, why it's very important. Let's remove this because we are going to label them into more specific names. Alright, let's start from here. This high, comparing to this high, is it higher or lower? It's lower. So this particular high is called a lower high. This high comparing to the previous high is lower. So this one is called a lower high. Now let's focus on the low. This low comparing to the previous low, is it lower or higher? Is lower. So this is a lower low. And this low comparing to this low, it's lower. So is a lower low. Now, let's focus on here. This high comparing to this high, is it higher or lower? It's higher. So it's a higher high. And this high comparing to this high is higher. So it's also a higher high. Now this low compared to this low is higher. So is a higher low. And this low comparing to this low is also higher. So this is a higher low. For those who are new to these terms, it may be a little confusing, but try to understand and try to memorize the different type by practicing putting the labels on every single highs and lows on the chart. I know it won't be easy, but you really need to understand the difference between lower high, lower low, higher low, and higher high. While on the sideways, we do not need to label anything because all of these are just the same high, while these are just the same low. So there is no specific label here. It's not like sideways high, sideways low. No, don't need, just high and low. You only have to pay attention on a downtrend market and on an uptrend market. In other words, once you see the market keep creating a lower high, lower low, lower high, lower low, you know that the market is in a downtrend. On the other hand, when the market keeps making higher low, higher high, higher low, higher high, you know that the market is in an uptrend. Why you really need to understand this particular label here? Because of this. I always tell you, when you trade, always look at the higher time frame bias for the direction, whether the market is a downtrend or uptrend. Now, in this picture, I'm gonna give you example of a downtrend market. Let's say the red one is D1. When we look at the lower time frame, this is more or less what usually happens, as you can imagine. The market can do up and down, but in the higher time frame, the market just make high, and lower low. This is what usually happen in the lower time frame. Either it is H1, M15, whatever time frame you are looking at. And this is why you need the label. Now take a look at this. Let's focus on the smaller time frame. So this is a lower high, and this creates a new lower low comparing to this. Now this is another lower high. This is lower low. Now this, comparing to this, is become a higher high. So many of us being fooled by the condition like this. If you are not aware of the higher time frame, you think the market create a higher high now. It's a reversal. Actually, you know that in a higher time frame, the market is bearish. So you can assure yourself that this can be a fake breakout. Some people call it stop hunt. Maybe others call it, liquidity grab or bank manipulation. Well, I don't know. I don't use those cool terms, maybe because I'm not that smart. To me, it's just pattern. When you know that a higher time frame is in a downtrend and then there is a higher high on the lower time frame, don't believe it right away. This could be a fake breakout. Here's another thing I want to show it to you. You want to focus on the certain things. Alright? So what is it? Buy only at a higher low. Sell only at the lower high. Do nothing at the lower low and at the higher high. Now, let me show you this. Which market structure, which order block will hold? Focus on this pattern. You want to wait. The market creates a lower high and then the market creates a lower low. Then you can start looking for your order block. Your order block will probably around here or here somewhere, right? So when a lower high is confirmed, when the price breaks the previous low and then create a new lower low. So this pattern is very important if you want to get the order blocks that hold. You only want to looking for the order blocks from a lower high that create a lower low. All right? Remember that sometimes I tell you that I often just put a limit order or buy order directly on its order block. I don't snipe. So this is the kind of pattern, a direct entry. When the price creating a lower high and then create a lower low, then you start looking for your order block. And the same thing when you see a higher low and then there is a higher high. This higher low confirm once there is a break above the previous high. Then you can start marking your order block. Your order block could be here or here because we know that the order block sometimes does not hit, right? But this kind of pattern which give you a high probability order blocks that will hold. You can stop, you can pause this video and take a screenshot of this. This is sell order block and this is for buy order block pattern. All right? So if you want to looking for buy order block pattern, you want to looking for this pattern with this level. Higher low, creating a higher high. This is lower high, creating a lower low. Then you can start looking for the order block. Now, I understand the market is not always as clear like this, right? In real life, the market could be like this. And for that, you need to practice, is this a higher high? This is a lower low. So you keep labeling, practicing until you find a specific pattern that's the same with this pattern. Now, let me show you an example. Well, this is cherry picking, but I want to show it to you, like how it works. Look, let's come back here. For sell, lower high, create a lower low. Here, lower high, create a lower low. Once the price break below and you look at, is this a lower high? Yes. Is this a lower low? Yes. Then you start looking for your order block. When it breaks below or your swing low, your order block is the last bullish candle before the breakout happen. When you choose the trade like this is the kind of trade that I usually sometimes just put pending order over here. Well, like I said, this is cherry picking, but when I place the order block like this, by looking at the higher time frame bias, it often to give you 1 to 5 to 1 to 10. And then here, look, I know this is a little bit difficult, but this is a higher low comparing to this, right? And this is higher high comparing to this and this. So now take a look again at the pattern. higher low, higher high. Then you can start looking for order block. Here, higher low, higher high. There is a break above. This is your order block. You really need to practice to look for the right order block like this, because like I said, the market is not always as clear as this. Sometimes it's hidden like this. I understand, especially for the new traders, this can be very confusing. I would suggest you to join the Order Blocks Alert channel and community. So here's the address, orderblocksalert.com. So what you will get when you join this order block, you will get something like this from me. So when the price hit my order block, like this, for example, I created swing high, swing low, and then the price come back. The moment the price come back to my order block, the robot will take a screenshot of my chart and then send it to you, so you will know whether it is a good order block or not. And I'm going to show it to you how to snipe my order block, okay? So you may have a question, am I trading this order block myself? Of course I do. But you have to understand, sometimes an order block hit by the price and it was midnight my time, so I was probably sleeping. And also another thing, I may have 2 or 3 running trades, so I'm not gonna take another trade because I set a rule that I will only trade a maximum of 3 trades running at the same time. So if there is another order block, I may not take it. But then also on the other hand, when I'm in front of the computer, when I find something like this, like last week, this is Aussie dollar, all right? So my order block hit by the price, and then you will get the alert. But then when I know that the price is too strong, when I'm in front of the computer, I can directly also send you the message, be careful, the price of AUD USD is very strong, do not enter directly, wait for the new order block formation on small time frame. So when I'm in front of the computer, I will also guide you what is what. Because basically when I'm creating this, even though this is a lower high creating a lower low, right? I don't know how the price will react when it reach my order block. The moment the price reach my order block here, you will get this screenshot. And then you decide if you do not feel comfortable, you just skip it. If you feel comfortable, you can trade it or you can snipe it. Now, I'm gonna show it to you how to snipe. Well, let's say you got an order block alert from me, okay? If the price coming from below and touching my order block, you will get a screenshot, right? When the price touch here. Then what you have to do on the lower time frame, either on M5, M15, or M1, you wait the price creating a higher high, and this higher high directly created a lower low. That is when you start looking for your order block. Your order block could be here, probably here, don't know. It depends on where your last bullish candle is. And this order block created from a higher time frame order block, which tell you the market is already bearish. So the moment you get a new lower low, the key is here in the lower low. Even though it is coming from a higher high, you can create an order block directly. All right? But if you want, for example, to be safer, you can waiting for a new lower high and breaking this lower low, and then you start looking for the order block. You can do that also, but you want to get as fast as possible or as early as possible to get a higher risk reward ratio, right? And this is, you already know, this is already a good zone from a higher time frame. So there is no problem for you to start looking from a higher high, break market structure, and create a lower low. So this is the pattern you want to looking for when you snipe. It's also the same for a buy snipe. When the price coming from the top, touch the order block, and then you will get an alert from me. What you have to do, you do not want to enter directly. You want to wait the market create a lower low, and this lower low directly break the previous high and create a higher high. And your order block could be somewhere here or anywhere. All right, so that is how to snipe. All right, that is all for today. Thank you so much for watching. I hope you learned something today. I'll see you in the group. Bye-bye.